You're listening to Coffee with Innovate Finance, where we speak with experts from the industry on the changing face of financial services and the future of fintech and financial innovation. I am Rashi Pandey, Head of Membership and Growth, and I'm very pleased to be joined by Sean Kiernan, who is the founder and CEO of Greengage. So, Greengage aspires to be the digital merchant bank that provides a platform of relationship based banking services to digital companies, SMEs, and high net worth individuals to the highest ethical, secure, and compliance standards. So, thank you so much for joining us today, Sean.
Delighted to be here, Rashi.
It's great to be, speaking with you. So tell us more about your background and how you founded Greengage. And I asked this because, you have some very exciting experiences while we were researching. And especially if I read correctly that you founded Greengage after working for the first bank in the world to offer crypto products to clients. So how did Greengage, come about then?
Uh, Thank you. One thing that I'm really excited about is the roots of banking and the likes of Sigmund Warburg and these luminaries in our tradition. But I also love what's happening in the digital space. I think there's a lot of revolutions going on in the background that these worlds are now coming together in interesting ways. I'm a banker by background. I cut my teeth at Credit Suisse. I built a bank in the UK within Credit Suisse. That's why I moved here. Originally, I was in Switzerland. Latterly, I was with the first bank in the world to do crypto, which was a Swiss private bank, and I was the COO and interim CEO of the London office. And that was a high net worth focused operation. We offered clients access to Bitcoin. We traded it and stored it, and this was really early days back in 2017. The world's moved on a bit, and even then, the real demand that I saw, obviously high net worths will have a continuing interest in this space, but was from corporates, and corporates just looking for transactional account services, GBP, Euro, etc., really basic stuff. And I think it's complicated for traditional financial services providers, including banks, to understand the unique risks and unique opportunities in this arena. Hence, Greengage was born basically as an idea to bridge some of these amazing new things that are coming with some of the old school, but rooted in tradition services that banks are and should be providing to innovative companies.
I was going to say, I love how you said long time ago, and then you said 2017. That is so true, right? For crypto, that was a long time
Completely.
ago.
Yeah.
Goodness, you have a very impressive background, I have to say. So, can you tell us more about Greengage and what's the vision and what problems are you really trying to solve with your different product offerings?
So the dream is to be a digital merchant bank, so an SME focused firm that allows enterprises to get access to relationship-led services for their accounts, transactions, but then also having a platform where we surface debt primarily for them to grow their business. And I think we've seen issues on both sides of that service provision. SMEs are struggling still to get debt, and there's some good innovative companies looking to fill that gap. But it's largely provided by non-banking actors, or increasingly fintechs are providing that good service. And the likes of Innovate Finance are doing great things to kind of raise awareness that there's a need and an opportunity for that. We've watched very closely in the likes of what's happened the past weeks with the likes of Credit Suisse going under. But more importantly, I think in the US, the digital friendly banks don't exist anymore. Silicon Valley Bank, Silvergate, Signature. And the reasons that they've disappeared are different. I wouldn't say it's one size fits all. But there is a question around fractional reserve lending and the way that banks have been set up and how firms can respond to that. And so what we're trying to do is essentially take a different view, a Web3 view, if you will, where we can operate transactional services on a clean basis. So we don't take fractional reserve lending. We work within the e-money, money service business style space. And then having that relationship and the transaction data, we can surface interesting opportunities for them using partnerships.
That's pretty cool. And yes, the recent news have been highlighting quite a few things and really trying to bring digital banking in the forefront, right? Like you said. So, can you elaborate on how you're creating the blueprint for digital merchant banking?
So this is a tradition that I think the UK has been at the forefront of for as long as merchant banking's existed. It's essentially where you sit on the same side of the table as a client. You get to know the client. You think, um, you try to put yourself in their shoes, and that's difficult, I think, for traditional banks to do. The tier one equity requirements and the way of shifting risk and the whole issues around conflicts of interest, which are super important to manage correctly, has changed the nature of the client relationship. And what we're trying to do is kind of rebase that, if you will. So we're not charging exorbitant fees. We charge roughly 5 grand a year for an account relationship, which is higher than most banks do, but it's enough to justify a dedicated relationship manager, somebody to get to know a client properly. Which for us is the key, we think, in a Web3 world, which is coming, where the likes of relationships and data are some of the things that we think are the only defensible proof points for looking at where the future heads, how we can hold on to a client and continue to add value to them. And so what we're trying to do is take that background, layer on services, and for us, the transactional layer is the key one, that we know that a lot of banks don't really see enough margin in offering payment services. So if we can find a sweet spot to build a relationship, we can get enough margin by offering them debt or whatever it may be on the platform to make sure that that client gets added value, and hopefully we then deserve the fee that we receive.
I love that you say fee, but then you also very much highlighted by saying that there's so much value add and what you guys are delivering. So, of course, you mentioned that you do charge a slightly higher fee. So what is it that you do at Greengage that differentiates you from the rest in the industry? And who are your customers?
Yep. So we are not tick box by any means. So we don't take compliance risk, and we all want to sleep at night. But the kinds of clients we can speak to will not easily fit into typically the automated onboarding tools from the likes of the challenger banks or the high street banks. So if you have a trust structure, or there's a foundation, or maybe even a charity that has a different set of directors, or maybe a legal entity format that doesn't neatly compute into one of the challenger banks, we're not necessarily looking to be one size fits all for the bulk of clients. We're looking for the unusual clients, ones that have maybe something that they're doing, which is a bit special. Digital asset firms by nature fit in that category, but only about 50% of our clients are in that space. We're speaking to people of different types of business. And we also see a segment in high net worth, and why we've made an exception for them, although they would classify by retail in some metrics, because we think the entrepreneurs that drive these businesses also are looking for the same level of service. They can have a personal account manager. This, in a way, is familiar to the likes of the premier desks, which some of the big banks have, but we've added something a little bit different with an edge in the platform business and also with our understanding of the digital asset space.
So can you tell us more about your e-money service, which was launched to family and friends?
Yeah, so we're now emerging from family and friends, which is very exciting. We have a very good group of clients, and what we're looking to offer them is I mean, one of our interlocutors referred to it as Revolut for Business. So it's a familiar service for most people. There's an app, there's a website. What's different is that we are what I would call friendly. So we will speak to people, we will listen to them, and we will help them. So if for example, the online portal doesn't necessarily do everything we need it to do, we're still scaling and growing. But if it doesn't fit perfectly, we will speak to somebody and help them navigate either in person, on the phone, by email if need be, so that we can get to know them and make sure that they fit our risk metrics so that we can work with them. And if they don't fit, we'll tell them quickly.
I love that you guys are growing and, more power to you and your team. But it's amazing that, you had that ecosystem and the support that you could launch it first to. So does the Greengage solution also help manage the current cost of living crisis for its customers?
I think the trick for us, and you're spot on, given our account fee not being the cheapest, kind of we need to make sure we add real value. And this is going to sound a bit strange, but for some of the clients, particularly in the digital asset space, 5 grand a year is really cost effective. There are other firms that charge considerably higher for services that, for at least what we see, um, are meaningful, and we have to do payments to a high degree of accuracy and efficiency. But the fees have a lot of, I would say, margin baked in if you charge a lot more than what we're looking to charge. We don't really make a huge margin on our fee because there's a human being there, because there's a bespoke nature to it. Where we make our margin are from the platform business. Once we get to know people, we bring them stuff that adds value to them and help them grow their business. And we also have a tech vertical where we have SaaS solutions and business apps that we can also make a fee from. But we don't need to make everything from the e-money fee. That for us is a relationship builder, if that makes sense.
Of course it does. I mean, I'm a firm believer in, relationships and nurturing that. And that's how you retain your customers, keep them happy, and improve your product in a way as well, right? And deliver what's most important to them. So, there is, of course, green in your name. So I have to ask this. Is it there for a reason? And is ESG and the environment, the impact important to you? And if so, what are you guys doing at Greengage on the ESG side of things?
It's a great question, and the name, there was a lot of thought that went into it. It wasn't our first name. Our first name was DAG, or Digital Asset Group, um, but that was always a placeholder.
Okay.
Yeah, surprise. Whereas Greengage for us was kind of a journey, if you will, of thinking through green, meaning environment, obviously, but growth, the color of money with the US dollar, and gauge, meaning collateral. So mortgage, for example. And the two combined, we thought, I mean, these are really important things at the essence of what a financial institution does, but collectively, they're a delicious fruit. So to answer your point around the environment, um, we are a small firm, so we don't have huge margins to deploy, but we have done a lot of thought leadership, and particularly in our industry within digital assets, there's a huge concern about environmental impact with energy use. The first podcast I did was on the mining space for our industry and just raising awareness of the new trends and potential solutions that we could look at to minimize the use of electricity. Very practically, we have our own little roof garden. We built uh, uh, a little space on the top of our building where we've brought some Greengage trees to life. They're just in bud, and we're looking to hopefully, as we grow, probably engage directly, not necessarily only through the likes of carbon credits, but by taking ownership of green space, because we think that's something that will add direct benefit to the community.
And talking about community, you also recently launched the Greengage report. And I want to say great wordplay there. So can you share some key insights and findings from that report with our listeners?
Yeah. So the big podcast, the gauge, which I think is the other wordplay for us, is trying to raise awareness of what we see as the more silent but intelligent voices. There's a lot of hyperbole in our industry, and here I'm kind of doffing my cap to the crypto space, where behind the scenes and below the surface, there's a lot of really clever lawyers, policymakers, accountants, entrepreneurs that are building quietly, and we wanted to give them a space. And I'm really enjoying it because I get to learn. As I see that, kind of you're enjoying the discussions. We've enjoyed listening to your podcasts with just a view to share and educate and inform.
That's amazing. That's amazing. I think education and like you said, information in this day and age is so important, and reaching, the people who are interested in it and financial education in general, and just about sustainability, etc., as well. And of course, about what you're doing. So of course, partnerships is a key component of success, within the fintech industry. And you partner with traditional finance companies within the digital asset space as well. So why those particular verticals and what do these key partnerships mean to you? If you could share some case studies as well, that would be amazing.
Yeah, and here I'm going to go back to the Web3 idea. So if we think of the future being an individual having choice and having access to what they see are the best in class products and services and financial services, the role of Greengage in that kind of metric is, can we bring the best in class to the surface so that the client can navigate the noise? Because increasingly there's a lot of noise, and it's good noise. I think there's tons of innovation from different partners in the space, the likes of the lending markets and factoring, asset-backed lending, really clever stuff with buy now, pay later. As an entrepreneur, if you're an SME and you see this kind of wall of choice, it's complicated. And you don't necessarily have the tools to navigate that without having somebody to kind of sort the wheat from the chaff. And so what we're seeing is opportunity, and we put this on our website as kind of an initial set of partners, but the idea of having a platform where once we have the relationship and the transactional data, we can bring to light some interesting choices for a client. Initially, we're focusing on B2B debt, because that's an area that we think is prime for disruption. But what we bring to the table then is a panel of credit funds, family offices, fintechs, the likes of embedded finance. And this is something we're building, so I can't say we're yet at the pinnacle. In addition to digital sources. So if we form partnerships with people that can give, for example, lending against digital assets into fiat, that's something that's needed. And we're not taking that risk on our balance sheet. We'll work with experts that can wear that kind of risk, because we've seen in the market that people that do take that kind of risk sometimes take it in perhaps not as risk adjusted means. And we'd rather work with partners that we know can survive, and particularly for our clients that are taking the borrow, that's a lower end of the risk spectrum than the ones giving the borrow. So we're keen to bring people stuff that they can get benefit from.
That's amazing to hear. That's amazing to hear. And of course, Sean, we covered a bit of your background and, moving back to your journey. But how has your journey been as a founder and CEO? And especially, I'm asking because of the current climate we are in. And of course, coming out of COVID-19, can you share your experience alongside challenges that you faced within this journey and any lessons learned along the way that you would like to share with your fellow founders and CEOs?
So I feel, for one, very fortunate. I think we've been lucky in some things, not always, but uh, COVID has been a disaster for some industries, and I think for fintech generally we're pretty insulated. Not in all bits of it. I want to caveat, but uh, there's been a lot of attention paid to the industry now. I think Silicon Valley Bank and the issues that they've had have been highlighting some real issues with the structuring of a bank's balance sheet and the idea of taking on risk. And we've had to pivot a few times. I mean, I was hoping to get a full UK banking license from the get-go, having done it within Credit Suisse, which is a machine, understandably. But I think the journey for us around exploring what is the regulatory appetite and what is the potential for having a crypto-friendly banking institution versus now what I think we've arrived at is a much lower risk proposition, and we think equally as scalable, of a Web3 banking services operation where we don't take on the fractional reserve lending, at least initially, and we grow and build to a stage when ideally as a profitable business, it's a very different discussion. So it's de-risking with a view to still deliver the services we'd always hoped to. And that has been a journey.
And any lessons that you would like to share, or any piece of advice that you would like to share with your fellow founders and CEOs, especially in the fintech space?
Yeah. I mean, the people that I've learned most from have been people that you can speak very openly to, and that's quite rare. So ideally other founders. It's quite lonely at times, and I'm very lucky to have a great board and team. But sometimes there are these things that you have to go to someone else that's been there in the same position and just kind of lay your soul out. And being that open and finding those few people that you can do that with is something that I've learned is quite precious.
That's amazing. That's great feedback for us as well. And I just want to say to our listeners, actually, we try our best to, get our founders and CEOs together as much as possible because we do believe in the power of the peer network. And like you said, it does get lonely sometimes, and people don't realize that, especially for founders and CEOs, because you have to just keep moving on, etc. But you're not alone. You have a lot of peers, and that's what you need to remember as well, of course. You guys are doing great stuff, of course, and like you said, building it on, moving forward. But what will success look like to you in 5 years with Greengage?
We don't want to be everything to everyone. I think our focus will be on keeping the dream alive of an SME digital merchant bank. And we don't want necessarily millions of clients. We want a really good cohort of interesting and clever firms and people that we have good relationships with. And I think that is a slightly different model to I think what uh, a lot of people talk about the hockey stick of growth, where you scale with a view to get big fast. I'd rather build something that I can be proud of and the team can be proud of in 5 years, and we keep the same level of service.
So, closing on, Sean, any exciting news you would like to share with us and anything we should keep a lookout for?
So we are just launching. So if there's anybody that has an interest in an account service with somebody that doesn't um, have preconceived notions of who you are, we'd be delighted to speak with you. I'm super excited to see where we go next.
That's amazing. That's amazing. Thank you so much, Sean, for speaking with us today. It was great learning more about you.
Real pleasure, Rishi. Thank you so much for having me.
You're most welcome, and more power to you and to the team at Greengage. And to our listeners, thank you once again for tuning into Coffee with Innovate Finance. Do look out for upcoming episodes and follow us on Twitter and LinkedIn for more on our upcoming programs and events. As always, until next time, take very good care of yourselves.